Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, June the 3rd. The year's 2019. Let's talk trading. The search. I was watching another trader's video, and it was like over an hour long. And he said in the beginning that, it's going to be an hour. And he was basically going to, tell you how he went from, I guess indicators and moving averages to price action. So, price action. Let me see. Let's see what this guy's talking about. Well, he started to drone. So I fast forwarded to about the last 10 minutes of the video. And there it was. The pitch. You see, he only tells you about price action in his course. And I just crack up. And then I was looking at another couple other systems. I'm always searching because I'm thinking maybe I can learn something else. But, it's just so hard to beat the turn trade or a holo trade or a wick zone trade. In fact, there was a trader who posted, made a nice profit off a monthly wick zone, said he's done for the day. So congratulations. But the thing is that the search, we all do it, but you have to be able to know what works, what doesn't, what works for you, because that's what's most important. But a lot of times, as I mentioned when we talked about that three-legged stool, the biggest impediment to your profitability isn't your inability when it comes to reading things on your trading platform, your charts, your gauges, your indicators. No. It's not that method. It's more you and your money management. And I always like to segue in the money management discussion, right? And your execution and performance. Because, if any one of these three things isn't solid, you're going to wind up losing, right? So the point is that when you're searching, look inward first. Like, what are you doing either incorrectly or improperly or not doing it all? Or what are you doing that you have discovered leads to loss instead of profit? I mean, there's no sense in doing the same thing over and over and expecting different results, right? We all know what Einstein had to say about that one. So the search, I mean, you take two or three trades. Let's say you take two or three wick zone trades and they don't work out. So you go, oh, that wick zone doesn't work. Well, really, three trades, is that enough? I mean, come on. Take a 10 trade, 100 trade, 0.01 lot, a micro lot, a dime a pip. I mean, come on. Think about it. A dime a pip, you take 100 trades, right? If the most you can lose is $1 a trade, you put a 10 pip stop loss, say, you think you're going to lose 100 times in a row if you try these methods? I mean, think about it. Do you really think you're going to lose 100 times in a row? You're going to blow that $100 account. It could happen, but I don't think so. Let's move on here. Okay, once again, this whole month, money risk management. Okay, we're still in that first trading day of the month, and look at here. All the gaps filled. I think last night there was 4 unfilled gaps when I posted that chart. Whether or not you took advantage, that's on you. I can't come and click that mouse. Well, I guess technically if I could, hook up my computer to your computer, I could click the mouse, but I'm not doing that. And we've got all green right now, but we're still 390 pips below that yearly open, but the month, week, and day are green, considering it's the first day of the month and first day of the week. And you see we're putting in a nice range here. So far, we've got 73 pips of range between the current daily high and low. But we're still below the low of the first trading day of the year, about 201 pips at the moment. And we're below all those opens. Oh, I didn't save. I'll do that after the video. You guys don't need to see me do housekeeping. And ditto for that screen, we're below all those previous ranges. We're still in today's range, of course. And we're coming back up. And you can see here on the daily, there's that lower wick zone. And 73 pips, only 3 over 100. And you can see dollar yen, an anemic 37 pips. And look at this, the beast only 50. I mean, did these pairs stop eating their Cheerios in the morning or their Wheaties? And there's that monthly D1 highest open, which is, so far as it's the first day, it's just an open. But you can see here a nice buy zone trade. And if I remember correctly, we were talking about, we had a long bias due to the pivot, and look what happened. It took out that pivot. So you see here, once again, you know, later, there was a couple of more entries. Long, we had that long bias. I mean, if you took that long, I don't know if you know, when you stopped, if you put your stop here, if you put it down here. Depends on your position size, of course. You want to maintain a constant risk. And you can see right now we're in the red rat zone. So red rats, you just have to hold on a bit. Now we took out the daily pivot. There's the weekly, there's the monthly. So I showed you yesterday the stats on those pivots being taken out. So you can see here we took out yesterday's pivot, but we still have a couple more to shoot for here. And we're only down 57 pips, so maybe not today, possibly tomorrow. But once again, these videos are for educational purposes only, and your results may be different from mine, and consult your professional financial advisor for investment advice. That just is so funny. Oh, here we go. 3 ball at the bottom. I think we had that yesterday. And as you can see here, green at the line, green at the line. Now we got a 3 ball at the top. Going to look for a red at the line. Oh, and one thing, if you notice, and it doesn't matter the time frame, if you can just wait patiently for that 3 ball, you see a 3 ball, you just let that candle close, okay? And you let that next candle open, and you see, does that candle reverse or does it keep going in the same direction? If it keeps going in the same direction, you just repeat the pattern. Because as you can see here, a 3 ball, so we have a turn trade right here, and what happened next? But you don't know that, but you do know right here, if it starts to go up off of that 3 ball right here, that, you know, this bar's closed, this bar's open, usually they're within a point, usually they're almost the same. But you look for that. That's what you're looking for. And I've yet to see anybody, any system, beat it. The only problem is that people, like if you're looking to reverse right now, you have to let this bar close. You got about 15 minutes for this bar to close. You have to let it close. Then you let the other one open, and then you just see what happens. and make sure you have your stop loss in place. But you will see this pattern repeat itself over and over and over again. And this turn trade with now a continuation, it doesn't matter what time frame, I've yet to see anything beat it. And remember, the 3-level ZZ is an indicator I modified. It's a zigzag indicator, and I extensively modify it. I mean, you talk about chart porn. If you turn on everything, you'll get some chart porn. But you turn on what you need, what you use. Now, yesterday, if I remember correctly, we were in the wick zone, and I said, in and out, and here you go. It was in it, out, in, out, in, out, in it, and out, and up. So, and here's the previous day's midpoint, if you're wondering what this is. I should probably update this maybe to 2019 and put the labels here and put how many pips away. Actually, it's over in the gauge, but I think I like it on my chart too. Okay, and you can see here one of my favorite trading screens, and just all the action at the previous day's low, which is of course that wick zone once again. And you can see the ticks, the volatility's kind of slowed down. We're only talking about 4 pips. And why does that keep doing that? And there we have a nice little Einstein trade. Once again, try not to get too greedy. And you can see here, on the M1, looking at whether or not lows are getting crisscrossed or not. So you can see here, price went down, price failed to go down, now it's going up. Because if it doesn't go down and break this low, then it's going up. And then if it comes up here and doesn't break that high, it's going down. So you can see here with all these highs and lows, what price is doing is a little congested. Okay, what did price just do? It came down, broke through that low. So now we can see prices going down based on price action. And you see we've got all different highs and lows here from the different time frames. So you can look at one chart as opposed to looking at a bunch of charts. Because there was this one guy, at least I assume it was a guy. I saw a thread, and once again, they're switching from different time frames. And every time I see that, it's just like price is the same on all time frames. The daily low on the 1 minute is the same as the daily low on the daily chart. It's not a different low. And why people keep getting misled by that. Hey, I have to admit, in the beginning, I was one of those multiple time frame people because I was using moving averages and some of that other nonsense that changes when you change chart periods. But these horizontal lines, they don't change. And that's why I stuck with them. That's why I discovered them, in the sense that I can run statistics off of them and I don't have to curve fit. And here's another example here. Just taking the last 2 bars with my 14-minute high-low. I like to use this as a breakout bar, and possibly you can see why. And frequency distribution once again here. I think I should probably put the current one in the description here, but that's an older indicator too. So, in your search, remember to look inward towards yourself first, see what you can improve, what you're doing, and then you can focus on what's going on with the chart. And in the meantime, As you're trading, just remember it's not what you trade, it's how you trade it. So let's drain the banks this month.